Hey guys, welcome to this video. Thank you so much for joining me. Today we're going to be talking about why you need to understand inflation and how understanding inflation can help you in your investing journey. So let's go ahead and get right into it. First off, what is inflation and how is it impacting you in your investing? Inflation is something that if you understand what's going on when they're printing all of this money and when they're injecting it all into the system, if you understand how to hedge or how to protect yourself against inflation, then you can come out the other side and not be impacted so negatively during this time. So what kind of things are going on in our economy right now because of inflation? Well, we're looking at higher prices in gas. We're looking at higher prices in rent. We're looking at higher prices in things like eggs, things like turkey, everything you can think of. These things are getting more and more expensive. We are currently at 6.8% inflation. That inflation rate is the highest that our economy has seen in the last 40 years. It means that your dollar, which used to have a dollar's worth of purchasing power back at the beginning of this year, now it has much less purchasing power based off the same dollar. That's because of the increase in prices. As inflation rises, prices have to rise with it because it's costing more for businesses to be able to produce the goods and services that we are consuming. And so as you go to your local market and you go to buy eggs, you go to buy your gas, you go to buy milk, these kinds of things are actually costing us more because of inflation. And so as inflation increases, then your purchasing power with the same amount of money is decreasing. You're no longer able to buy as many things as you could with the same amount of money because of inflation. Now, how does that impact the stock market? Well, it's very interesting how it impacts the stock market. Inflation is something that is running rampant right now. And for the longest time, the stock market has been on fire. However, as we all know, right now, we are experiencing a sell-off in the stock market. It seems that everybody is deciding to sell off their stock. Most stocks right now are actually down. Some are down 5, 10, 20, 30% depending on the particular stock. And one of the reasons is because of inflation, and it's because of the policies that the Fed has announced that they're going to have come 2022. What are those policies? What is it that the Fed is doing that is actually impacting our investing in the stock market? They're deciding that they're going to stop purchasing so many bonds, which is propping up the stock market. Well, when the government raises the interest rates, it's more expensive for businesses to go out and borrow money. This means that things start slowing down and companies are likely to not be as profitable in the near future because of this tightening that's going on. Now, all of these things are different aspects that are all pertaining to both your finances and your investing. And so as you're investing in the stock market and all of these things are going on in the background, the most important thing to understand is, what do you need to do? What do you need to understand? How do you need to think about the future? Think about your finances, think about your investing in order to protect it from getting inflated away. And what this means is that as you're looking at the inflation rate as 6.8%, that means that you need to be making a better than 6.8% return on your money in order to make sure that you're keeping up with inflation. So if you have a particular stock in your investment portfolio that is making you less than 6.8%, then currently you would actually be losing money in that investment. As we look back in the past, there's a lot of different investment strategies, and we've talked about them on this channel. Things like investing in individual stocks or investing in ETFs. Now, when you invest in a particular stock, then that means that you have a higher risk, and it also means that you have a higher opportunity for reward. So when that particular company does well, if it if the stock increases by 15-20%, then your investment in that has paid off by 15 to 20% because that stock has gone up. However, if the stock also goes down 15 or 20%, that also means because you're investing in that individual stock, then it means that you've now lost 15 to 20% of your investment. I would suggest investing in something like an ETF. There's a lot of different ones. You can follow the S&P 500, and that is something that over the years has brought a return equal to or greater than the majority of investors who are picking individual stocks. That can be one of the safer routes for your finances moving forward, and it helps you in hedging against inflation by simply opening up an account. I suggest Robinhood. I use Robinhood myself, and that is a perfect app to be able to go in, purchase stocks from, and then each and every single month putting a little more money into those stocks so that you can continue to grow your portfolio. Now, if you found this video helpful, go ahead and hit that like button, hit the subscribe button. I really do appreciate it, and I look forward to seeing you next week.